It's your boy E coming at you with another video, trying to impart some of this game and wisdom on my people. You feel me? Financial literacy is very important. It's something I wish I would have been taught or exposed to at a younger age. If so, I'm very confident I would have been a multimillionaire by now. Either way, I'm on my way there regardless. But I don't want to be the only one getting rich. I want y'all to be rich too, or to be financially stable, financially literate, just financially, I just want financial freedom for everyone. Feel me? Anyone that know me and that's worked with me know that when I come up, I try to make sure that everyone around me come up. Feel me? Going back to when I was out in the streets, not doing the right thing, to even when I had my own businesses, etc. I made sure that everyone around me came up with me, or I at least tried to put them on. You feel me? That's just the type of dude I am. So again, coming at you with another video, trying to impart some knowledge and wisdom and game on y'all. You feel me? So basically, the market today was actually a pretty easy environment to trade in. It was risk on, if you will. And even though we're obviously in a bear market, you know, in bear markets, you're gonna have rallies in a bear market. Basically today we were able to enjoy a little portion of a bear market rally. And here, let me just show you. Let's go to the hourly, or actually the daily. All right, this is the SPY, the S&P 500. It's basically the overall market, the 500 biggest publicly owned companies in the United States. So again, yeah, this is the SPY. Actually, let me go back to the hourly chart. So as you can see, we've been in a bear market for a while, but the market did turn around and run up and got back to its more recent high. That was on the 16th of August. So we're talking about 3 weeks ago. Peaked at around 430, 431-ish. And then from there started this downtrend that you see here. You know, obviously it's a downtrend. Let me go ahead and draw a trend line here for you. Something like this. People draw their trend lines different ways. Some start from the actual body of the candle. Some start from the wicks. It really doesn't matter as long as you're consistent with whatever you're with however you're drawing your trend lines. Let's go ahead and thicken that up. I like my lines thick like my hose. You feel me? All right, so there's a trend line that's from the top to where we are right now. And if you pay attention, I mean, obviously the price action is going to deviate from the trend line here and there, but it'll always revert back to the mean. So yeah, hit highs, rejected off that level, sold off, and look, just sold off, try to catch some support here. If you look at the chart, there's some support. There's a little minor support, intraday support right there, like something like right around there. So look, boom, boom, selling off, boom, bounced back up to the trend line, rejected, sold off again, came back to the support, tried to bounce again, bounced up, briefly held over that trend line, kind of bounced off of it, then sold off, boom. And then if you look, it bounced off this 120-day moving average, and that's just a simple moving average, 120-day. I use that as basically confirmation of which direction the trend is going in a particular stock or trading vehicle. Again, that's a 120-day simple moving average. Also use the 10-day simple moving average as almost like a trade, like a trade signal. So when you cross over, when price action crosses over the blue 10-day simple moving average, that kind of gives me confirmation that it's bullish. But you can't just go off of one thing. You basically have to take as many things as possible, as in data points, watch lists, high volume tickers, fundamentals, market condition, market sentiment, all of these different things. And there's a lot more, or indicators, volume, RSI. You have to use all of these things to your advantage. And what that does is gives you an edge in the market. And that's the only way that you're going to be successful in the stock market. You have to have an edge. All right. So again, I know I got off topic, but yeah, it's following the trend line. Look, bounced off of it, then sold off. Boom, hit that 120-day directional moving average. Tried to bounce, couldn't hold the bounce. It was a dead cat bounce. Sold off. Boom, and just sold off. Let's try to zoom in a little bit here. All right, sold off. Boom. But then, as you can see, look, it sold off, and then it found support down here. All right. Now, look at that support. Right here, it acted as resistance. Broke above it, couldn't hold, broke back down, acted as resistance. Sold off. Found another little level here to bounce off of. You can see, look. See that? You want to make sure you have these levels right. And mainly, you want to get your levels, and key levels especially, off your daily chart. Those are going to be the strongest levels. This is actually an hourly chart, but it's so many trading periods that it's you can use that as to find your levels too, especially intraday. But look, bounced off, boom, sold off, found some support here, boom, bounced, tried to break out of the downtrend, looked like it was grinding up. Then as soon as it hit that directional SMA, that 120-day simple moving average, hit that, rejected hard. So I don't know what happened this day. Maybe the Fed was talking or something, or we got some news or something. But we had a massive sell-off on that day, and that was the 26th of August. So boom, sold off. Look at that move right there. It went from 420, sold off all the way down to damn near 400. And this is in one day. Damn near. It is. It's in one trading period. So from 420 down to 400. So whoever shorted the market at this time made a killing. All right? I guarantee you this same sell-off is going to coincide with all the biggest companies that are in the SPY or the Qs, like in Apple, Tesla, Microsoft, Facebook, Amazon, the leaders, the big boys. More than likely, all of them sold off on this day. So that's why you need to watch the SPY. It kind of gives you an overall market sentiment. But again, sold off, boom. Came down here and found some support at 400. Now, notice how well it respected that support. And one of the reasons is because 400 is a nice round number. All right? So that's a reason that I'm at respect at that level. But if you scroll over here, look, tried to break above it, reject it, then tried to break it above it, try to break above it, reject it, and then bounced up over it. And now that became support. Scrolling back over, it's a little far off, but that's resistance as well. I mean, that's only a couple cents. That's technically resistance right there running into. So again, came down, hit that $400 level, bounced, grinded up, but notice, look where it bounced to, the trend line I drew, and rejected. Another hard rejection on that day. So I guess the Fed or Jerome Powell was running his mouth that day again. And that was August 30th. It's also the end of the month, so people are, taking out cash, taking out profits, doing maneuvers here and there for tax purposes. So that coupled with, the market sentiment and probably the Fed running their mouth caused that sell-off. But let's try to zoom in here a little bit. So that's the 30th. Boom. Broke down the $400 level. Tried to find some support. Bounced. Grinded up. Boom. Hit this resistance at 400. Just by looking at that, you know it was bearish, because remember what I told you about the wicks? Whenever the wicks are on the top, that means a lot of selling's going on. Selling, profit taking, shorting,